Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. I haven't tried this, but if you're watching this clip, give me a thumbs up right off the bat. And the reason I say that is let's try to see how many thumbs up I can get on this clip. Uranium's booming. It's looking good. So if you like uranium, give it a thumbs up. We're doing well today, so don't forget to click the thumb up button. I just wanted to see how many I can get on one of these videos. So we're going to go do our daily technical analysis update of commodities. I'm going to walk through the different sectors, dollar, 10-year yield, precious metals, and then all the different commodity sectors that I follow. Energy is looking really strong today. That is oil and uranium included. And we'll step through. I'll give you my financial opinion, and here we go. So we've got the dollar behind me. It is right on its resistance level. Again, kind of a bigger picture view. We're right on this support resistance line that we've used throughout the decades. This is a long-term, this white support line going across here. What we're basically doing is we're right up on top of it, slapping our head right on it. And usually when you come up to these resistance lines, they can pause. They can do a little bit of a U-shape, basically what we're getting. And what you end up getting is kind of a cup and handle pattern. Like it comes like this, just kind of like it is, cup and handle, and we could get a break on higher. I suspect that's probably going to happen. We'll probably see a stronger DXY. Reason being, we're in an energy crisis over in Europe. They're going to probably have higher rates of inflation than the United States. And you're going to see that in the differences of currencies. So that's kind of what I'm expecting. This is the chart that it's drawing out. It looks like it wants to go higher in this short, medium, long-term type thing. And if we break this very large resistance line, this multi-decade line, we could see a good move higher in the dollar. The 10-year yield, and remember the correlation between oil, energy prices, and the 10-year yield. I kind of think that the yields are going to go higher no matter what the Federal Reserve says, because they're going to do what the markets are going to do. And I don't think they could fight this movement higher in yields, because I think energy prices are going to go higher in this winter and probably into 2023. So I do think that this is going to head higher. We're right at that resistance line. The resistance line is the white line coming across here. We've seen it here recently since 2009 forward. We've basically been hitting this resistance line and using it as support kind of all around here. It looks like to me that we want to go higher in this. It kind of reinstates or reinsures us that oil is probably going higher too, because they're not directly linked, but they're closely related. When oil goes higher, inflation goes higher. When inflation goes higher, the 10-year yield goes higher. So that's what we're seeing here in the short term, is we're basically playing with this resistance line. We could see a big break to the upside. I think that's going to correlate with energy prices with a big break to the upside as well. TLT, which is 20-year bonds, this is still working its way lower. We've got a little bit of buying pressure here recently, but I think that's going to be short-lived. And then the 30-year yield, I'm just kind of going through the bond market, guys. It's important to understand this stuff. We've been working our way higher on the 30-year. We've broken this massive downtrend line to the upside, and we're starting to get some buying pressure in it. We've broken the pattern here to the upside. We've been moving higher, and I think this is all going to go higher over time due to energy shortage world. Obviously, a lot depends on what Russia does in reaching a peaceful agreement and getting natural gas flows back to Europe. But if that does not happen, we could see a pretty tight energy market, which means higher yields, higher inflation, and higher energy prices being the driver of that. Looking at the CRB index, it is breaking higher. Again, click that thumbs up button. We are heading higher in commodities. If you like commodities, thumb up this video for me. Thank you. So we've got gold. Gold doesn't like higher yields. It doesn't like a higher dollar. It is finding itself in a weird situation, because I think gold accounts for the monetary, the increase in the monetary inflation, but we're coming to a spot where the M2 money supply is leveling off, but we still have money transferring from one asset to another asset within the system. So we're not necessarily getting huge amounts of monetary inflation, but we're still seeing the cash flows rotate into energy, causing problems in consumer price index numbers. So I think what's happening is they're getting kind of bit in the backside here, because they used to measure inflation by monetary expansion, the M2 money supply, which is inflationary by definition. But now they measure it using the CPI, Consumer Price Index. But if you have a major energy shortage, you're going to increase the Consumer Price Index, even though you can go flat or lower on the M2 money supply. That means that money's still rotating around the economy differently. It's still seeking the areas where the problems exist and persist. So gold's kind of in a weird situation here because it's stuck between the consumer price index and monetary inflation. And we're basically right on support, right where it's at. I think silver's kind of in that mix as well, but it does to me look like it's trying to put in some sort of bottom. Nice little hammer candlestick here, right above support. And we've broken the downtrend line. So I still like these physical metals. I still think they're going to do well. I like platinum the most because I think it is the most inflation hedged of anything. But we are coming up into the markets that are a little bit different than, say, previous years. I think we're experiencing our first global energy crisis. And the money, I think, will rotate differently now than what it might have before, because we didn't really have a constraint on energy too much growing throughout the world. It was more related to the demand and the money supply. And I think what's happening is that money supply, even though they can manipulate demand and money supply, I think an energy shortage or crisis will kind of limit their options or abilities to control the inflation and the rotation of money about the system. They don't want the money going into commodities. They don't want it going in the consumer price index, but they don't really have a control over that. So they're going to realize that here real quick when energy prices go up and the consumer price index of all these countries go kind of ballistic. The XAU to gold ratio is heading a little bit lower. We're kind of playing with this downside breakout here. I can draw this line a little bit different. I didn't draw it in there as well. You can kind of come off the bottom of this, but still, this channel here, we could break to the downside. We have not broken out of this downward channel in XAU to gold yet. Is this a good spot to be buying? Are they going to let the M2 money supply go up? I have my doubts on that because they're trying to control inflation, and I think they're reaching kind of far and wide to figure out how to solve this, and I don't think they have a good solution. So right now, they're going to basically kill the stock market, do QT, which is going to hurt the financial assets, and they're trying to increase rates because the rates are going to increase no matter what on them. They can't buy all these bonds and hold rates down. So I think they're going to have to continue to tighten, and that's going to be by a function of energy prices going up. So I think the world's going to be short on oil. I think the world's going to be short on energy in general, and I think that we could see market conditions that are different than previous years. And I think there's only going to be a few really good investments that are going to work very, very well because the options are going to be limited in an energy constrained world, which means energy is a good spot to be. But XAU to gold is still heading lower. We haven't broken out of that big downtrend yet. SILJ heading a little bit lower, but we're still above this support line or area underneath. So we still have support underneath us. It's not the end of the world yet, at least. But we're moving sideways. We've broken the downtrend, falling kind of wedge pattern, and we're bouncing above support. That still looks very good. Same with GDX. It's basically the same pattern, broken downtrend line. We're right at support. If we look underneath this support line, basically where we're at, we do have further support underneath us, multiple areas, but it does look like we want to go lower here in the short term. And so gold and silver is kind of bearing the brunt of the move. Now, oil is looking pretty strong. Oil is still in an uptrend type movement. There's your uptrend line coming up. We've broken out of this consolidation period. This thing looks fantastic, guys, from the perspective of charting. It's not awesome for everyone in the world experiencing higher energy prices. But here's the weekly candlestick. This looks good to go higher. We've broken out of this support resistance line here to the upside. So that looks really good on a daily technical chart basis. We've had this support resistance line. We used it as support. We dropped below it, and now we're fighting back above it. And we've had a nice, good, strong bounce off of this support zone to the upside. And we finished quite strong. This looks really good to go higher. Very good. So very positive for oil, very positive for energy, negative for anybody who's an energy user. Natural gas, it is still hanging out and trying to break out. It tried a little breakout today, and the sellers came in and knocked it back under this. Are we going to break out here? It sure looks like it wants to. So we'll see if we can break. I don't know if the paper heroes in the market are trying to push this thing down. I have no idea what's going on at this resistance line, but we're trying to break through it here. If we break through it, I think we're going to see a big run. And big picture view, we've got the accumulation cylinder that's going on. This thing's I'm going to say they are hanging on by dear life to hold this thing within this pattern. They being the Federal Reserve, they being the government, they being anybody who doesn't like inflation, they're hanging on for their dear life to try to hold this thing down. When this thing breaks, I think you're going to see a big move higher. It's going to be like the last resistance line of defense that this thing's got. And if we kind of look left, we had some resistance through this area through here as well. We're still playing with that resistance area as well. So when it breaks out of this area, we're going to see some big moves. And the natural gas companies, I think, are going to go a little ballistic, guys. If you need help figuring out which companies to invest in, let me, look in the description link, the Platinum membership. You can ask me questions during our question and answer sessions. But yeah, there's a lot of opportunity out there. And XOP, we're kind of coming up in this channel. We're getting a little bit of buying pressure today, 1.22. I know natural gas is pulling us down. Crude oil's holding us higher. Which way is this thing going to break? To me, it still looks good, but we do have a little bit of wicks at the top, little bit of selling pressure wanting to reverse us off our highs today. So we'll see where we go next. I'm not really, trying to predict the price movement here, but it sure looks good. Oil looks really strong, and if oil continues higher, I don't see why this wouldn't continue higher as well. OIH is an energy service company. We've broken out of this pattern here to the upside. Had a little bit of a pullback. Today we were coming back higher. I still think that we're going to work our way higher over time. It still looks absolutely excellent. And a lot of good investments in energy service going on right now. Don't forget to click the upward thumb button. I'm trying to see how many upward thumbs I can get today. So here's Sprott Physical Uranium Trust. Oh my goodness, guys. This looks fantastic. I love it. I love it, guys. Now, let's do a little bit more analysis on this than just the normal. So backing out, this is what we want to break. That guy right there. That guy. This guy. Yeah, that guy. That guy right there is right at, let me put it at about 18.15. We want to close above that and get away from that level. Now, I like this lead-in pattern. I've talked about the lead-in pattern before. This is what it looks like. Something like that. And usually it falls somewhere in this kind of region right in there. I drew it a little bit too low there. This is what we have. Do you see the pattern right here? And then we came back to that lead-in, that little zone in there. So this little tail is this little tail there. That's called the slingshot cheetah pattern, where we come on down, we dip, we get some guys to basically start shorting the stock, and then we just hammer them to into oblivion. What people are going to say is this is a shoulder, head, shoulder, and then they're going to say, oh, it's going to go down, so I'm going to short it when it goes below there. Then they start shorting this, they push it down, the market manipulators, whomever, they push it below, they get a bunch of people with stop losses, they get, the people with stop losses sell me their shares, I buy them all up, and then I go long, in this general vicinity over here, and then the shorts get caught, and then they do a short squeeze. It's called the slingshot cheetah. You got to get used to it if you're part of the channel. We've got a pattern here. Basically, it started here. If you've been on part of the channel in terms of in part of the website, Platinum membership. We've been talking about this. Up movement, and smaller selling pressure. That smaller selling pressure and this way that this is moving lends me to believe that this is ready to go a lot higher, guys. We've got a nice big bullish engulfing today. We've got the pattern of the big green candlesticks. The green army's coming, and it could show no mercy here if we break that 18-15 line and close up here. That's our goal. We want to close above that line. Now, we could get stuck going through this thing. It is a strong resistance line. We've had resistance there before. It is strong. The resistance is strong at 18-15. We'll get through it. Give it some time. URNM, does that look strong? Another 10% day. The green army is coming. We've got a broken downtrend line. Step 1, break the downtrend line. Step 2, higher low, higher low. Check, check, check. Higher high. Hello. You should be listening. Back test to the higher high. Like I said, a couple of small down days, right? Remember what we said, the bloody nose. Big move, bloody nose, back to a retest. Boom! Using it as support and jumping off that support level. If you guys are part of that Platinum membership, you know we were doing some digging down here at this. And we're starting to move higher. That looks really good. Now, what about Camco? Camco or Leader? Does that look good? Tell me that looks good. You should be able to recognize these charts, guys. You should be looking at it going, I know exactly what this guy's talking about. We're in this pattern here. We call this an accumulation cylinder. People are accumulating. They're buying it up. We have a bullish engulfing right there. That's this guy engulfing the candlesticks before it. That is a bullish move to go higher. And what are we doing? We're going higher. We zoom in for the dailies. What do we see? The green army's coming, guys. The green army is coming. Broken downtrend. Step 1, higher high. Step 2, higher low. Higher high. We're coming up. We're putting in a green army. We got a nice big bullish engulfing today. Finishing pretty strong. Click the thumb up button, guys. This is it. Uranium is it. Click the thumb up button. All right. Next, we got obviously a lot of double-digit moves in the uranium sector. If you guys want to know what uranium stocks are my favorite, Platinum membership in the description link below. COPX moving on higher. A little lower today, but we're moving in an uptrend fashion. So that's what I meant by moving on higher, is we've got basically this trend line that's here. We're moving on up. We did a little bit of a trying to break out through here, hitting our head on this resistance, coming on back. I do think that we'll eventually break it, but there's the resistance line that we've got to break through first. So that's COPX, copper. The CRB to S&P 500, we are heading higher. It's looking really good. From a daily perspective, we got this nice little squeezing up of the pattern, and we're starting to break. Boom, 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 boom. Little small pullback, and here we go again. We're breaking higher. Looks excellent. Our leader oil is heading higher. It looks good. I think it's going to continue higher. So everything looks great there. Platinum's also outperforming, and uranium's going to be outperforming here. I think people are positioning in the mining companies of uranium before a move in the physical price of uranium. So get ready. We've got REMX. REMX is pulling back a little bit today. We've got this trend line. We're kind of just moving back a little bit. That's okay in the short term. Long term, it's going to be a killer. I think that they're going to try to implement more electric vehicles, more renewable energy, which is more rare earth metals. Higher, higher, higher is what I think over the medium to long term. Lithium getting a little bit more selling pressure in here. We were down today. We have that bearish type movement yesterday. I do think we're going to do a retest down here at $73 or so. Looking at the S&P 500, lower today as expected, and I still think this is going to come into pressure with an increasing interest rate environment. The same is going to be said for the U.S. Composite Index, lower. Now, what did we see here? We saw a decoupling of energy and uranium to these indexes. We are seeing the decoupling happen right in front of our eyes. This is huge. We're seeing money flows rotate to where we want them to rotate, almost as if we knew that this was going to happen with an increasing interest rate environment. Interesting, isn't it? That if you've been on part of the channel, that we were expecting this rotation, and that I didn't know necessarily when this would happen, but I think it's happening now. So we had a little bit of coupling through here. We're starting to decouple. We're trying to get this thing all decoupled away from the overall markets. I think that the margin or leverage in the system starting to deleverage, and we're getting that decoupling, which is awesome. So it's happening. EEM, again, we're just moving sideways. I think this will move higher over time, given where the dollar could potentially be going. I should say the dollar is going to be a headwind. Commodities and the pricing of commodities is going to be a tailwind for EEM. It's caught between the dollar strength and the strength in commodities. This is what EEM is caught between. We've got XHB. XHB is heading a little bit lower today. We're still above this downtrend line. Could we see a little bit lower move? I think so. This is a pretty big down day, and it's got some momentum behind it. It had some punch, so to speak. Lumber still moving down a little bit lower, but again, looks like we're coming to a spot where we're getting some little bit support. Cocoa futures heading a little bit lower. Still looks good to move higher, though. Wheat is moving higher, breaking out. That looks fantastic. Soybeans still within the pattern. It's going to break at any second, probably to the upside here. Corn's breaking to the upside, so that looks good. Copper getting a little bit more of a selling pressure. There's still some fears out there from a recession. I think we're going to see a split between energy and a lot of other commodities in the short term. Then they'll all link up later on. That's kind of my first inclination of what's going to potentially happen. Mu coming back down a little bit. I still think we're going to see a little bit lower. This is a bearish engulfing here. Last trading session, which means we usually are going to head lower in the short term until I see a reversal pattern. So I think we're going to see a pullback there. And all of the fertilizer companies look like they're going to do a pullback as well. Looking at aluminum, aluminum is trying to put in a bottom here. I think this looks really good. Getting a little bloody nose today. So I think that looks great for a move higher. And then looking at the Baltic Dry Index, again, recessionary fears. Energy is just going ballistic all over the place. I do think that there could be recession and that the Baltic Dry Index may actually head lower in the short term before heading higher. I think the strongest of all the moves, or of all the areas, is America. I do think it's the strongest because we've got basically, we're full of cash. Our bank accounts are full of cash. I think we're very strong from a delinquency standpoint. We have very low delinquencies. Everything looks strong there, but around the world and the rate at which these things are changing, energy prices in particular around the world, the rate of change is so great that I think we're going to struggle all over there. And it's going to have an impact everywhere in the world. So the rate of change in energy prices is causing a problem, and I think that interest rates are going to chase that rate of change in energy. So I think higher interest rates and a large rotation of money towards energy is going to happen, and I think some of the other areas could struggle. They're trying their best to basically destroy the demand through higher interest rates, but that's fixing not the problem. It's basically trying to kill the demand side of things. What would normally happen in these markets before is they would kill the demand, but the supply would come back on, and everything would equilibrate. You know, it would equal each other out based off of killing some demand and some supply of energy coming on. The problem is the supply of energy is so constrained that they can kill the demand side, and inflation could still persist through energy prices being short on the supply side. So I think they're kind of in a tough spot right now, the Federal Reserve. I don't know how they can fix this, because if we continue to have shortages of energy and the energy is going to pull all energy up around the world, I think that they're still going to have a problem with inflation. So we're going to see an increasing interest rate environment with increasing inflation. And it could persist for a while because I don't think they have the tools to fight a supply side constrained energy market. What that means, I think, is that money's going to rotate into energy like we've never seen before. And eventually, depending on how long this lasts, we could see a large influx of money into precious metals because your currencies could have problems at some point if it lasts long enough. So what I think they're trying to do is they're trying to hit it hard in the beginning with increasing interest rates, strongly, and really trying to kill the demand and try to bring this all into equilibrium. Can they do that? And will they be successful? I don't know. It's gonna be a weird game that they're gonna play, and I don't know if we've played this game before for the length and duration that could potentially go down in terms of the length. So the length is what's going to kill this, I think, that duration, how long this thing lasts at increasing interest rates and increasing energy prices. The longer it lasts, the higher a currency problem could, exist. So the probability of a currency problem is higher the longer this energy crisis lasts. So it's interesting how to play all this. And if you guys need help playing this, description link below, Platinum membership, sign up. I talk a lot about companies, talk a lot about commodities and precious metals and ratio investing and how we can swap metals back and forth and increase our ounces in our ownership through lower acquisition costs. Don't forget to give me a thumb up too. I'm going to see how many thumb ups I can get this time. Definitely click the thumb up button. Let's see if we can get over like 500. Let's try it. And thanks for viewing, guys. Really appreciate it. Hopefully you did well in the markets today. If you're a Uranium investor, boom. All right, guys. We'll catch you next time. This is Finding Value.